18 of 19 series are aligned with stagflation mild this morning. That is the highest confirmation we have observed in this regime configuration over the past 5 trading sessions. The current macro regime is stagflation mild, with a confirmation score of 18 out of 19. Stagflation mild is a mathematical environment where growth momentum decelerates at -0.6001, while inflation momentum accelerates at +0.0081 simultaneously. The coherence score stands at moderate, and the confirmation score of 18 out of 19 represents substantial systematic agreement across asset classes and economic indicators. Historically, this level of alignment has persisted in 52% of comparable cases over 3-month periods when reached from similar conditions. Compared to last week, confirmation has remained stable at 18 out of 19 series, suggesting the stagflationary configuration is holding rather than deteriorating. Environments with this mathematical signature have historically coincided with compressed equity multiples, elevated commodity volatility, and widened credit spreads, observable price behavior patterns across prior market cycles. Initial jobless claims carry red momentum, defined as the 30-day rate of change below the 40th percentile of its 3-year range. In 7 of 11 comparable historical periods, labor market deterioration at this mathematical threshold coincided with broader employment weakness within the same quarter. Core personal consumption expenditures display green momentum, with a 30-day rate of change above the 60th percentile. In 8 of 11 similar instances, this inflation signal historically showed acceleration within the same 3-month horizon. Non-farm payroll employment shows red momentum, defined as the 30-day rate of change below the 40th percentile of its 3-year range. In 9 of 11 comparable periods, employment growth deceleration at this level coincided with sustained labor market softening over the subsequent quarter. The 10-year Treasury yield stands at 4.42%, below the mathematical trigger threshold of 4.45% that would activate the conditional inflation acceleration signal. If the 10-year yield crosses 4.45% and holds for 5 consecutive sessions, historical data shows that inflation composite readings accelerated in 9 of 11 comparable instances, which would increase the mathematical case for an acceleration transition. If the Fear and Greed Index drops below 15 and holds for 5 consecutive sessions, the confirmation score deteriorated in 7 of 9 comparable instances, which would formally lower confidence in regime persistence. The map is live. These conditions are being monitored daily across all 19 series. Atlas is the automated, rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework, price structure, rate of change, risk regime, and market participation across 407 liquid symbols every trading day. When all 4 layers agree on a symbol, Atlas records it as a potential long or potential short condition under the framework. These are time-stamped model readings, logged for members to study. The environment view and the condition log sit side by side inside Atlas. They are separate outputs. The regime does not pick the symbols, the 4 layers do. Members use Atlas to study how the framework has recorded conditions across prior environments, as historical behavior, not as trade selection. Atlas runs the framework. You study the outputs and environment. You decide what to do next. This approach is potential, educational, and may help serious investors understand how mathematical conditions have evolved across 407 symbols in prior market cycles. The morning brief is the public surface. The live Atlas dashboard shows the full 19 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com.